As mentioned, Blake Sutherland, I'm EVP Market Engagement, and my role is to engage our customers, our ecosystem, our new partners, and find solutions for our community. And we're very excited today to have some experts here in the cyber insurance industry to talk about what's going on in that industry. So to kick it off, I'll ask each of you to introduce yourself, a little bit about your role in your companies, and I'll add probably a little bit of interesting information. Why don't we start with you, Monica?
Awesome. I'm Cry. I lead risk and insurance at Google Cloud. That involves actually purchasing insurance for Google and Google Cloud, and then I also run Alphabet's actuarial team. And on the Google side and the Google Cloud side, I work a lot with the business to try to think about how we can couple cyber insurance with our products. And so there's a lot of innovative partnership stuff that I do too. Nice to meet everyone.
Well, welcome. Little known fact about Monica, she's largely responsible for this group being up here. It was a conversation we had with Monica probably about 2 years ago, and we were explaining some of the feedback we were getting from our community as it relates to the needs for assurance to get better insurance. And she recommended that we needed a progressive partner who understood how to build solutions in this space, which led us to McGillen Partners. So that leads us to Ryan.
Thanks, Monica. Thanks, Blake. My name is Ryan Griffin. Great to see a lot of you again. I was on this stage last year. And again, really excited about the partnership with HITRUST. Again, our role is as a capital finder. So we'll talk about the role that Josh to my right has and Monica to my left has. But ultimately work with clients trying to design and figure out the best way to offload some of this risk into the cyber insurance marketplace. So happy to be here today.
Yeah. So as a past participant, you know how things go. In fact, we got a lot of feedback last year about cyber insurance, and it was right after that session that we got in a conference room and we started to map out, so how do we go and find a solution for the market? So which led us to Josh and Triumph Cyber.
Thanks, Blake. Josh Ledoux, Triumph Cyber. I am CEO of Triumph. As part of that, we launched the first monoline cyber syndicate, Syndicate 1322. That was a little more than a couple of years ago today. Been in the industry for about 20 years, been able to participate and watch the evolution of the cyber insurance market really from its foundational point. Has changed a lot, which we'll talk a little bit about today, and sort of some of the challenges that we have and some of the solutions that we're working on with HITRUST. So very excited to be here and talking about the marriage of third-party assurance and insurance.
Okay, great. Well, welcome, panelists. Why don't we kick things off? And maybe something I hear constantly from our community is cyber insurance seems to have been a roller coaster for them for many years now. And is a roller coaster. Could someone explain why it's a roller coaster, maybe, first of all? Ryan, why don't I turn that one over to you?
Sure. I think for those of you who were here last year, I was very apologetic over the last couple years. It has indeed been a roller coaster, and as Josh mentioned, being in this industry for a long time, we are desperately trying to find folks to come into the risk pool. Most of you in this audience have been in this risk pool for a long time, given the industry concentration we have in the room. But I will kind of say the roller coaster, we just have to look back to yesterday's panel with the gentleman from Recorded Future. I mean, you talk about ransomware. It caught the industry a little bit by surprise, and frankly, it hit just about every industry sector out there. And so a lot of underwriters thought they had some diversification on the risk pool that they had, but their loss ratios would tell a different story. So again, I would say the last 12 to 18 months has been much better financially for the cyber insurance industry, partially thanks to you all for, I mean, you're probably paying close to 3x what you were paying 5 or 6 years ago. So again, more premium base brings in a bit more stability for what can be an unpredictable risk. Josh, anything to add there?
Yeah, a few things. I think, one, this is an evolving market. The idea that sort of we're at one point or another permanently is just not the case. It's going to be a bit of a roller coaster to come, and I would say there's more nuance. So it's not just market up, market down. It is individual industry classes, and we've seen those more so than the broader market be affected over time. I think one of the key factors in that is we don't have the same type of data as other lines of business. So if you think about life insurance or property, you have decades or maybe hundreds of years of data supporting what the insurance programs look like, the pricing and the actuarial data behind that supports it. Unlike that, there's approximately 15 years of data in all of cyber, all the cyber industry. Most of the first 5-10 years of that data, very poor quality. And then importantly, the technology landscape has changed dramatically as we move to more interdependency from one company to the next, shared technology. And so really the underlying data and what we're relying on to price and assess the market is changing in real time, and we've probably got a couple of decades left at least of that. So that's another reason for the roller coaster environment as we are.
Monica, what about from the actuary side? You've got direct experience on that on cyber.
Yeah, absolutely. I think at a high level, what I was going to point to was similar. An immature market, data, not having enough of it, and the third one passed me, but you had mentioned it. I think on the immature market part, one of the things that we're seeing is that the coverage varies a lot depending on the carrier, and they're still trying to converge what we're actually covering, and that's because of the nature of the evolving risk. From the data side, I think it's going to take a while, and some of the initiatives that we're all working on is helping this, but it's going to take a while until we have enough information to accurately price and underwrite insurance based off of that data. So
I add one component to that,
Of course.
just to say, I entered the market in 2008. If you look at the losses and what caused those and what the concerns were, 2008, 2009, virtually all the industry losses were unencrypted, lost laptops. That felt like 95% of the volume. We swept to 2015, you had large-scale data breaches, Home Depot, Target, some of the Blues plans. You had a number of large-scale sort of data breaches. That became the big concern, and folks were running from that. 2019, the ransomware craze sort of came into full thrust, and that was the concern. And now this year, following Change, which you guys might have heard of, and the CrowdStrike incident, along with CDK, which was auto dealership software, you really have business income loss, and this shared environment of technology as the core concerns for the industry. So in 15 years, that focus has shifted 4 times, and probably many more to come. So.
I just had one comment. If I were to summarize it, industry peer had said that previously you had to convince people to buy cyber insurance. It was hard to sell, and now it's hard to buy, where it's just changed so much in the last 5-ish years. So very different landscape.
Great, and that's a great lead up because we're going to change things up. Maybe I watch a little too much football, but when you have an expert panel, you have a speed round, and you ask them a lot of questions. And the rules of this game is this is up, this is not going anywhere, and this is down. And if we look out the next 12 to 18 months, so first question: premiums up or down?
I feel like a Caesar.
Oh boy, we got a little
course the brokers
dispute on the
say
panel. Maybe you'd want to address it. You were the odd person out, Ryan. So why do you think it's going to go down?
That's fair. As the broker, I always want to make sure that we're trying to get the best premiums for our clients. I look a little bit at the capital base, and again, if you look at some of the financial statements of leading cyber insurers out there, there is some healthy profit in the space today, right? And so this idea of where is there some absorption of losses, and where can they continue to give back premium to make a reasonable profit to offer a product that's sustainable. And then secondly, I think some of the nuanced financial instruments that insurers are looking to use. So things like catastrophic bonds, things that were historically used in the property and casualty space are finally making their way into cyber. And I think it'll create a much more stable environment. But again, I'm not on the hook for the losses, so.
Yeah, well, and you're the minority here.
Yes.
The majority report, any comments as to why you both thought it was going up?
I can throw out there, I think in the very short term, probably some heavy competition going into Q4. There's a lot of aggressive capital. Again, that will be nuanced across different industries. But ultimately, the losses from CrowdStrike, CDK, and Change Health have not actually registered within the industry yet. And I think those are going to be sort of wide-ranging losses, and the business income loss adjustments can take 8 months to a year on average. So we're not going to see some of those losses come through, but as they do trickle into the market, I think you're going to see reaction and fear.
Yeah, and then I just say, I think a lot of the people in the audience aren't insurance experts, but what happens in insurance is there's cycles. So you have a soft market and a hard market, prices will go down and then prices will go up, and it kind of varies over time. If I were to answer that question, in the short term, I think prices are going to go down, but with cyber insurance, because there are these big attacks that happen, those cycles are pretty short. They kind of flip quickly. Suddenly prices are going down and then they're quickly going up. And I think in the longer term, because of these big events, senior management at insurers have started to worry about, are we getting enough premium for these catastrophic risks? And I think that will impact things over time.
Okay, I thought these would be fast questions. It's an interesting debate on each of them. So how about then claims? Claims up or down? Okay, you're all in agreement. Claims are going up. Whoa, okay, that's not good. Insurance questionnaires, longer or shorter? Longer would be up.
I think shorter.
You think they're going to get shorter? Okay, and this isn't just your ideas for the market. This is the market in general.
I think there's going to be better data sources out there that insurers can leverage.
Okay, good. Requests for higher coverage amounts, up or down? Okay, everyone needs more insurance. Okay. And overall process to get insurance, harder or easier?
Yeah.
Okay, and people generally think it's hard today, I think? Okay.
A lot of
It'll remain
complaints.
hard.
Yeah.
Okay, so, and because you're all very data-oriented and very clever, the most important question in this round is on Sunday. Will Dallas beat Pittsburgh? Okay, my survival pool is, I wish you all went like this. Okay, good stuff. Okay, so next question. We talked about the increased breaches and business interruption. We have a lot of folks here that are very interested in vendor risk management. And obviously, strong assurances, risk management, important part of that. Where do you think cyber insurance plays in the vendor relationship? And what advice would you have for both the vendor and sort of the relying party that's asking vendors to have insurance and do business with them? Any comments?
Got a quick thought on that. I'll kick to the panel. In terms of the most obvious, it is a risk transference vehicle, moving shifting the risk from the buying party to us. And obviously for a customer purchasing vendor services, it's sort of a three-part relationship there, in that the customer has exposure. They're somewhat transferring that to the entity that is performing a service, and then that entity is subsequently transferring the risk to a policy. So at its core level, it is a risk transference product. I think value and what folks should be thinking about in terms of the policy purchase is the nuance of coverage. So as you're either a buyer of the coverage or a customer of a vendor buying that policy, really from two different perspectives, the concern should be the same. And the reality is there's not sort of a standard ISO policy out there dictating the nature of coverage from any insurer. There may be an ISO policy, but nobody references it. And the reality is every single carrier is defining every element of coverage in their own way, the way they define networks and extended networks, the relationship between a vendor, sub-vendors, third and fourth party risk. So all of those distinct elements are nuanced across the industry. Even internally to the industry, as we've just had these large losses, reinsurers who sort of sit above all the insurers and share the risk with direct insurance companies, they're having difficulty of understanding their exposure to things like CrowdStrike, et cetera, because they don't know all of the policy language. So even internal to the industry, we don't have a good accounting of that, never mind downstream and for the buying clients who don't do this all day for a living. And so I would say the first thing is to understand all insurance policies are not created equal, and you really need to find the right policy for the right company. Some folks are looking for the cheapest solution, not the greatest breadth of coverage, not necessarily any resources you can pull from, and in some cases that's appropriate. I would typically advise against that, but really understanding who you're partnering with is a critical aspect of that. And then again, understanding the policy language if you're a buyer, but also if you're that customer where the vendor is providing services, you want to make sure that your risk is transferred appropriately through that third party. Many of those vendors are small and do not have the revenue or the assets to sort of make a customer whole, and therefore that insurance purchase of the vendor is a critical aspect in the nature of the coverage they're buying. It's not just limits, it is definitions, it is sublimits, exclusionary language, reporting timelines, there's a lot to it.
Yeah, I'd take a slightly different angle. I think with CDK, Change Healthcare, even CrowdStrike, it became very apparent how important third-party risk is and those relationships that we have. When you think about what the insurance industry can do, if we take an example in auto, just to kind of maybe simplify a little bit, It's well known in auto insurance and by insurers that a Volvo, for example, is more safe than a Jeep without a top, right? And if you decide to buy a Volvo, most times the insurers will reflect that in their rates. I think the insurance industry can really play a strong role here in trying to hold technology companies and software vendors accountable for the built-in security that they have within their systems. And I think that's very important. And we're seeing it to start to happen. So there's a bunch of insurtechs that are out there that have these studies. For example, I use Google because I work at Google, but these studies that say that Google Workspace, if you use Google Workspace, your premium goes down by upwards of 50% in some cases compared to other competitors. So you're seeing that, but I don't think it's widely adopted yet. And reports like the CSRB report that talked about the security of different tech companies and kind of compared them helps to put that a little bit more in the public light of the need to evaluate the risk of your partners and make your risk purchasing or technology purchasing decisions accordingly. So I'm excited about the direction, but.
Yeah, agreed.
Okay, good. So this was an interesting one that came up at lunch, and it's hard to believe. Apparently, the insurance often gets a bad reputation. I can't imagine. I mean, other than maybe football advice, I've never seen sort of anything that would make me believe that. But where, sort of the last thing that people want to do, they want to get it quick. They don't like a lot of process, but it's contrasted with the whole larger applications, more questions, deeper amounts of information needed. And what are your thoughts as to how this all gets streamlined? Monica? Oh, sorry.
Yeah, go ahead, Monica.
Are you sure? Yeah. Okay. So similar to what I was talking about before, I think there's this disconnect between the insurance industry and the security industry. And a lot of times you speak to security professionals, probably like many of you in the room, that are frustrated because the investment that you have in security is never really validated anywhere. And a couple years ago, we thought to ourselves at Google, and then of course across this whole panel, that there might be a role that the insurance industry can play within that space of helping validate your investment in security. So if you are more secure, you can reflect that in your premium as a result. And so one of the programs that we put together at Google, but it's really less about this exact program, it's more about the umbrella and the direction of the industry, is putting together CIS benchmarks, the Center for Internet Security, where we have an automatic scan that's free for all customers within Google Cloud's environment. Through a couple clicks, you can send that directly to insurance partners, and then they will underwrite and price policies accordingly. And I think the goal is that becomes more normal, whether it's HITRUST or otherwise, right? Different frameworks, that becomes more normal within the insurance industry, just like in auto insurance, to make another example. There are devices in your car that will kind of track the risk and reward you for doing the right thing. And then you're aligning all incentives.
Yeah, and I would say, again, I'm pretty critical of our industry. We have to be self-reflective, and I think we took too much time, at least when we got off the ground in cyber, borrowing concepts from other lines of coverage. So just because we did something in property or directors and officers liability, we thought, we could just apply that to cyber. And there is the birth of cyber insurance applications that are now very unwieldy and duplicative to the work you all do every day. So I think it's about identifying the right professionals and the organizations that are kind of leading edge on inside-out data and find ways to leverage that data with insurance companies who are striving for that type of validated data. And so that's where the future is. But again, it's going to take all of you in this room to collaborate with other stakeholders in your organization. I doubt there's too many people who are solely responsible for insurance in this room. Most people duck when that's offered to you at your organization. So it's about getting your finance and legal folks to get on side, leverage the work you're doing, as opposed to just overlaying more insurance applications at your feet.
And as you speak of unwieldy, certainly from a client perspective, the insurance application spectrum is all over the place in terms of the breadth of the applications, depth of the applications. From an insurer perspective, receiving one of, I don't know, 70 to 100 different applications from the industry, trying to normalize the data, collect it in a structured fashion, and actually be able to start to pull apart what is causing loss and what can we, deliver to our clients in terms of, hey, address these concerns. They are the primary factors for loss. It's very difficult. So uniformity around data and structured data collection, I think, is a critical aspect of normalizing the process. Obviously, leveraging work already done is a huge component. I also think a piece of this that doesn't get talked about very much is the lack of security in the existing insurance process. And so I don't know if you all out there know that, but when you fill out all of that state secret data on an application, a broker is going to take that application, they're going to send it in clear text email to something like 30 to 100 different cyber markets. All of those cyber markets are going to effectively store your data indefinitely, and for the most part, I don't want to speak for all insurers, a lot of folks aren't as security savvy as perhaps many of you in the room. And so the idea of this endless collection of data, even if it is unstructured, it's kind of a very attractive target for attackers and maybe could become the source for an attack. So even in that element, there's sort of the lack of sophistication, the way we transfer and intake data is a pretty big issue, and one I've thought about for a long time. How do we securely ingest, normalize that data, create it structured, and have value out of it? So that's some of what I'm concerned with kind of as we move forward.
Okay, great. And well, one aspect I'd ask you about is, like, certainly we make a big deal when we have an independence aspect to our assurance where anything that is attested to, there is evidence for, and it's independently verified, where my sense of a questionnaire is someone asking me how wonderful I am, and of course I'm very wonderful if you ask me, but if you ask someone else, maybe I'm not so wonderful, right? So self-attestation data versus independently verified data, where does that play in the decision-making or risk, in fact? That
I think this is part of the evolution. Some of the stuff Monica's doing makes it very compelling over time in terms of real-time data collection, but ultimately, and obviously real-time from the source as opposed to the opinion of that data, but absolutely the idea of introducing this solution to a problem the industry has faced over a long time. Hey, this question on the application really can be read 4 different ways. The yes or no, therefore, is not reliable when you see that. Having a third party say, this is what we mean, we've actually looked at that control, that's what's in place, and you can have reliance upon that when you're writing this policy, that is a massive advance in the industry.
And I would say the thing that we don't talk about openly as an industry is that the thing just under the surface is that many insurers will look at an application the minute that event happened, right? And go look back to see what you attested to on that application. You all probably signed your name next to some document that says, to the best of my knowledge, I truthfully, submit that these answers are accurate. And oftentimes that yes question, you get the root cause analysis and the forensics, and it's sure enough that it wasn't, that tool was not extended to that part of the environment. And what the insurers will say is, I know again, they've stepped up, paid a ton of claims in this arena, but they have pretty good arguments in many scenarios to deny a claim and make you sue them for coverage. And again, we don't want it to get to that point, and it's only a matter of time where a handful of insurers will say enough is enough. You're not being as truthful, or it's not as accurate, it's not attested to, and we're gonna bring actions against our clients to deny claims. And again, we don't want that as an industry, but I will tell you there's a lot of evidence out there that that's happening. Those attestations are not accurate.
I would just add that it takes the pressure off the person that's writing the application when you have an independently verified source, because I've spoken to a bunch of CISOs through this program that we run, and they're always worried about, well, what if I write the wrong thing on the application? Because their intention is good, right? But if you're saying, do you have MFA, yes or no, and 99% of your environment does, it might come through
mostly yes.
Yes, exactly.
That's not an option on the test, but yes.
Yeah. Very good. Now, Monica, I don't know if you want to talk a little bit more about the program that you've created at Google, because I think we're like-minded here in that better information, better assurances, provide better risk understanding, which makes for better risk decisions as it relates to insurance.
Yeah, absolutely. So I touched upon it at a high level, just double click on it a little bit, but our intention is that to take the metrics that a security team would think about when they're trying to understand risk and do that at a very high level, right? We're not looking for which ports are open in a detailed level. It's more at a high level. Out of 1,000 privileged accounts, 900 have MFA or whatever it might be. So take that information at a high level and use it to help insurers underwrite and price risk. The insurance industry thinks about risk in terms of frequency and severity. So what's the likelihood that something could happen? If something happens, how bad might it be? And how do we use the metrics that security professionals use day in and day out and translate that to how they think about things? So I'm an actuary by background. I've been in the insurance industry for 15 years. 10 of those were as an actuary. And so we use the background of how to price risk to try to help translate that to partners. Right now, we're partnered with Munich Re and Allianz, and once customers send that data through, they will provide a cyber insurance policy on the back of that data sharing that provides broader coverage for Google Cloud and premium that reflects your security. So the more secure you are, the more Google Cloud you use, the lower the premium. And we're continuing to invest and expand in that program and hope to add more carriers over time.
Great. And Ryan, why don't you tell us a little bit about the HITRUST Shared Risk Facility?
Yeah, again, borrowing a lot of the work that Monica did, right? These are cutting edge ideas around how do we take telemetry of data, right? Leverage the work you're doing, leverage key infrastructure that you're already using that is already maybe inherently more secure by design. So what we've been tasked with, literally as Blake said, we exited stage right here last year, went into a conference room and it was like, okay, draw me how do we create an insurance product specific to this audience. And so yeah, it's taken us better part of the year. It never helps when there's big headline events in this industry, I will say. And folks like Josh kind of raised their hand and said, I've known HITRUST and respected them. He's been an underwriter in the healthcare industry for a very long time, never shied away from this risk pool and said, I know HITRUST. It would be incredible to create something that saves you all on a day-to-day basis the time and effort to create, fill out those unwieldy applications. And ultimately what we're doing is we're partnering Josh's capacity. He mentioned it's a syndicate out of Lloyd's of London, bringing these risk pools to market. You're the most mature risk pool in an industry, and then spreading it across a handful of leading insurers in this space. So ideally what we want to do is take, again, the great work and the investment that you guys are making in HITRUST today, leverage that information, get into the hands of smart underwriters who are going to appreciate the work that you're doing. And that leads to kind of Monica's point. You want to take and combine sort of the work you're doing and the outlook that you have and the seriousness of which you're taking security and privacy and pairing it with the right capital providers. And I mean, Monica can attest to how hard it is and how it's changed in 5 years since this program really was thought of. You had some insurers who were not interested in that at all. They're interested in the old ways of doing things. And you have to find innovative partners like the Munich Re's and Josh's firm to get this off the ground. So you'll see more information on this.
Cool. And we have a booth right outside. You can come and ask questions. Yep. But maybe just dig in on that a little bit. Sorry, again, thinking of the audience, right? Like a lot of this audience is called in. They're not the primary organization responsible. They're the ones that get shipped the questionnaire from someone inside their organization who's responsible for getting. What advice can you give them to be proactive with other areas of their business so that they can take advantage and ultimately get rewarded for the work that they do?
Absolutely. For the folks that are running the risk, like the insurance procurement process in your organizations, as a broker, you're starting that process at least 120 days from renewal. So one, you need to know when your renewal date. When do you get sent that pesky questionnaire today? Is it with a 30-day deadline? Is it with a 90-day deadline? And then talk to your counterparts who are responsible for insurance purchasing and educate them on things like the HITRUST program, and if you're a Google Cloud user, what's available to you as a user of that product, and insert that into strategy so you have more options as part of your renewal. We're not saying that this is necessarily the panacea for all risks day one, but what we believe is if you guys pool your risk together in a mature risk pool, in the long term, we'll get off this roller coaster ride, and maybe it'll be a nice, top down in a Jeep ride along, Highway 1, right? Like,
A safe Jeep.
yeah, it's a safer
yes,
version of that. Some nice roll bars, but that's the end goal in this. And again, give you guys optionality and eliminate some of the duplicative work you're doing day to day now.
Just piggybacking off that for a moment, it was not an easy time to launch a dedicated consortium for healthcare, centric pool of risk. The work that's been done by this group and my ability to articulate the delta between sort of the average risk here and the average risk in the wild is really the foundation of why we're able to put that together. And I think buyers should be very concerned about the pool of risk in which you sit, because as we saw in 2019, you had, frankly, mostly poorly secured entities, not in all cases, but mostly poorly secured entities getting targeted en masse. And that's why industry class didn't really matter. Sophistication and security of that risk is really what mattered relative to their size and sort of revenue, et cetera. So just to say, it's really the work of the folks in this room that have allowed this to happen, and the vision from HITRUST, Miguel, and our partners, Monica, all kind of seeing this potential evolution, but really on the backs of what you have done. And the idea of partnering with folks who are like-minded is really important, creating that stable pool of risk.
Now, Josh, I know the HITRUST facility has some unique features to it. Did you want to elaborate on some of that? Or you mentioned you have to, not all policies are made equal. So did you want to elaborate what's unique about the HITRUST one?
Would love to. And there's a few components that aren't just specific to the policy, so I'll cover on those. But I think just quickly knocking it off, we already talked about sort of that streamlined submission process and seamless renewals. Really, once you're into this process, your updates through the accreditation or certification process and what goes into the RDS and then is ingested by us is more or less taking care of that renewal process. So once you're involved, it makes for a long-term sort of easy and secure process. So that is a differentiator in the market. In terms of policy form, very clear and concise form. As Ryan mentioned before, we inherited a lot from other lines of business, and most of the insurers haven't taken the time to step back on a policy form basis and say, how much of this language is irrelevant or could be cut or reduced or less legalese to make it a cyber-specific policy. We've done that. Probably the average policy out there is 25 to 50 pages. I don't know, 25 to 40. We are an 11-page policy form, 1 page of exclusionary language, very easy to read. And so the idea is the coverage is accessible and understandable and really whittled down as much as we could from an exclusionary perspective, with the idea that we select strong risk that does the right thing. We don't make our money off excluding claims from folks that need us in that moment. And so that may sound obvious, but it is not necessarily the mentality across the market. So that's an important fact. Really full breadth of and depth of coverage available anywhere in the market with some key features that are in addition to what's available elsewhere. We also can blend tech and MPL, which a lot of cyber markets can't bring in traditional E&O coverages into a cyber policy. We can blend those. As we know, many of you are providing those technology services to the customers and buyers. And from a buyer-customer perspective, having a single policy is very important. We can maybe touch on that if we've got time on the end as to why that matters. Our two clients in particular will have a 25% discount off of our standard rating model. So all else equal, if you were the same entity with an R2 certification but did everything else outside of the R2, because we have that third-party attestation and the confidence that comes along with that, we're willing to implement, and it's built into our rating model. Just to be clear for everybody, that doesn't mean if your policy is $100,000 today, we'll give you a policy for $75,000. Rating models are all determined internally to each company. They're not shared across entities. And so for us, that means same policy would have written for 2 entities. There's automatically a 25% discount in addition to other credits we would give for the specific security controls. So that's a big delta in our pricing model, pretty substantial. Dedicated white glove risk management services. So we bring cyber risk management services to our client. We have a dedicated internal team that works with their policyholders from the time that they come on. To be clear, this is for primary policyholders, which is the focus of the HITRUST Shared Risk Facility. But basically, those services are delivered by folks who are HITRUST certified themselves, and we at Trium are going through the process of HITRUST certification in an effort to partner and ensure the same level of attention to detail and security posture that you all have in the room. And so the idea is, as we go through that journey and process ourselves, we're educating our resources, and they can help our clients along the way. So it's just another resource built in. Built-in access to higher capacity levels. So as you mature as an organization, as you grow, as your contractual requirements change, and perhaps Customers are requiring more purchase of limit, or if you're a buyer and you need your clients to hold more limit based on your assessment of your exposure to their services, this program comes with a built-in growth factor over time, meaning as each year goes by, we can add carriers into the mix. You still deal with the same lead underwriter and Triumph. You still have the same coverage and all of those elements in place, the same ease of process without sharing your data with the 100 carriers out there. All of that continues, but you get a larger and larger capacity block that you have access to. That's very important. The last piece I'll just kind of touch on is a dedicated endorsement, and that is just for this group. That endorsement allows for a business income loss advance. And what we saw through Change Health and other sort of business interruption incidents, that has a big impact on cash flow, and that can be sort of severely detrimental to the fact of impacting the viability of a business, particularly as that revenue level gets smaller. So this is essentially a cash advance that while a business income loss is being adjusted, that could take 8 months to a year, there's a cash flow coming in from the policy for several months into that initial incident. So with that, sorry for the airtime, but a lot of differentiators.
No, well, actually, you gave me a good way to pick on Ryan, because I know Google is HITRUST certified as a partner in our shared responsibility and inheritance program, and I know you're well on your way. But Ryan, what?
It's the first call to our Chief Information Security and Chief Privacy Officer around making it a complete secure ecosystem that you're operating in.
Oh. Good. Well, thank you for that, Josh. That was a good one. So maybe, because to leave some questions for the audience, why don't we sort of take on a last question? And maybe the question is, what should this group be taking away? And what would be your advice to them in terms of next steps that they should be looking at? Who wants to take this one first?
I'm happy to start. So I think one of the things I'd say is that you know the security of your environment probably more than the insurance buyer at the company or others. And so I would suggest you take an active role in pitching why you've done what you've done, the technology that you're buying, why it might be more secure if you believe that to be the case, and putting together a story for the insurance leader, because the way insurance is bought today, a lot of it is about the story, especially at the higher end, the bigger companies. And so, and you know that story better than anyone else. So from a call to action perspective, I'd say focus on that, and then also think about if you're using Google Cloud or HITRUST or other technologies that you can show and demonstrate your posture with, to talk to your cyber insurers and brokers and explain that to them, because I don't think the industry is going to change until we get to behavioral change with people, and in a way it could start with a lot of you telling that story.
Yeah, no, I think you nailed it on the head, Monica. I mean, the call to action is be more engaged. You're responsible for this risk. Have a more vocal role in the purchase of this insurance. I mean, some of you are probably getting footed the bill at times in your budget. So again, we want to take that connection between the frameworks you're following, the technology initiatives you have in the pipeline, and finding the right capital providers who will respect that, so you have that easier ride over the next 5 years. So again, I don't have to come here every other year and apologize for rates doubling, or it's usually go up. The rise is much faster than the fall typically on the insurance cycle side. So.
I very much appreciate those thoughts from Ryan and Monica. I think I would go slightly different direction of what I would like taken away, and that is to really change the mindset of buyers of insurance, and really investments in cybersecurity and compliance to be thought of more as differentiating factors for an organization that lead to new and enhanced revenue opportunities. And I think if organizations can start to think from that perspective, and I will give a quick example, it's going to change the nature of that investment and the role that you all play in. And as opposed to dragging an organization into compliance, you really get a thrust from the business, the production side of it, to engage, because there's more opportunity created. And I will just use really our HITRUST Shared Risk Facility and this engagement as an example. One of the reasons we're going through high trust compliance is because we do want to separate ourselves. We want you to feel that we're part of an ecosystem that cares in the same way that you do. And it's my belief that will drive additional sort of engagement and hopefully purchase of the policy, and the fact that you can see a holistic approach and that we care in the same way you do. And as you think about that as customers and vendors, really that investment, I think, is going to be the big differentiator. It's going to create a lot of opportunity for businesses that get it and bite into this and can demonstrate it. That is night and day for what the business opportunities are going to be. I'm telling you, it's all we're kind of talking about is the safety of that interrelationship, that interwoven network. So that's where I'd go with it.